South African insurers have been spreading their wings and expanding offshore in recent years, with the likes of Discovery and Sanlam creating multinational franchises. Old Mutual, on the other hand, has been withdrawing from some markets as part of its turnaround strategy. Stanlib equity research analyst Ndina Rabali joins us in studio to share his views. Ndina, let's start with Discovery and where they stand from an insurance perspective, given their foray into China with Ping An. How do you feel about the company as a whole?
I mean, Discovery has done very well. I mean, it's a company that's previously demonstrated its ability to grow from a zero base, and develop a brand and a franchise. So what we've seen coming through over the past 2 or 3 years is that their UK businesses have started to do well after a period of prolonged investment into that region. And now they've announced that they're going to China, which I think investors are starting to think, given their track record of building businesses from scratch, that could be one major growth area for Discovery in the next 2 or 3 years.
Ndina, as far as the outlay goes for some of these operations, obviously they've been around a while. They've also got the American operation. What's that doing to their income statement at the moment? Are they becoming contributors yet, or is it still very much trying to break even at this point for those operations? Most
of the operations are still quite small relative to the profits they get in South Africa. I think the big positive is that most of the management teams have learned from history. So if you look at what Old Mutual did and Discovery, where you invested massive amounts of capital into some of these regions without the proper know-how, and subsequently lost or destroyed significant amounts of value. So what they're doing currently is investing incremental amounts of capital, not really betting the sheep. And what you see now is that the returns and the profits are still quite small, but once they become more comfortable, they should ramp up that investment and you should see profits coming through.
From a valuation perspective, Discovery is trading at all-time highs. Is this one for the bottom drawer?
Sure, it's a tough one because I mean, the problem you have is that how much value can you put on some of these growth businesses? And Discovery is one business which, like I've said, has got a brilliant track record in terms of developing businesses from zero and bringing value to shareholders.
But it's priced for perfection.
It's priced for perfection, yes, but one never knows. I mean, if you look at for example, if you take China and take the scale of that market, the number of people in that market, I mean, Discovery, in terms of what they could do in that market, it could be anything. So, you know, what's priced in depends on your view of what they could do in some of these areas.
Ndina, let's put it this way. We've actually got the graph up on the screen at the moment, and investors will see watching this the vertical tilt that started in March, just after the company announced its results. What do you think happened with the market? Did they suddenly realize that the investments that they've made into intellectual property in these different regions, somehow it all came together and we've seen this massive value unlock take place? Just from the psychology side of things, what do you think investors have thought about Discovery after those last results?
I mean, I was a part of the results presentation when Adrian Gore was presenting, and he's an excellent presenter. And one of the things he showed is a hospital in China looked at the public hospital versus a private hospital. Now, if you looked at the public hospitals, they were jam-packed, queues were very long. And if you look at the private hospitals, there was basically no one there. And he was saying that there's an opportunity to offer a product where everyone wants to have access to private hospitals, but they currently can't. But if you can offer a product in terms of health insurance that enables them to achieve what they desire, you can realize massive returns. So people, I think people sort of listened to that and bought into the fact that, you know, there's massive value that could be created in a region like China simply because of the non-existence of health insurance products in that market.
Let's talk. You want to stay with Discovery for a moment?
Yeah, I just wanted to say, Bronwyn, obviously I had a colleague that went to those results as well, and he came back a convert. In fact, he referred to Steve Jobs as being the Adrian Gore of the consumer electronics sector. As far as CEOs go, Ndina, what do you make of Adrian Gore? Is he one of the best?
It sounds like people are coming back from the presenter with the Stockholm syndrome. They're falling in love with management.
Absolutely.
Look, I think the jury is still out, but if you can deliver value in China, then I think you'd have to put him in the same bracket as Steve Jobs.
Well, there we go. Big shoes that he's going
No
after.
pressure.
Right, let's talk about Old Mutual. Julian
Yes.
Roberts has effectively navigated the company through a turnaround. We are seeing the share price stable with traction. Some people say that it can go higher. Are you in that camp?
I am, but one must realize that the strategy has changed. So what they did previously was they sold assets and divested out of certain markets. And now they've changed into a strategy of trying to grow into certain markets. For example, on the continent, Latin America, maybe some countries in Asia. So you've gone from selling assets, which is, it requires a different skill set from someone who's trying to allocate capital and grow. So it depends highly on whether management can execute efficiently.
And quite a different model if we look at what they do is they've tried to enter markets by buying businesses as opposed to Discovery, who try and get into a market without too much capital outlay and then develop the intellectual property to function to succeed in that market. So would you say that perhaps Discovery's path is a little bit less risky than what Old Mutual are attempting to do?
I would say that Old Mutual as well is sort of leaning towards a model where they look for JVs and partnerships, and some of the assets that they're buying do not really require massive amounts of capital. They've learned from history where we've seen them lose lots of capital and destroy lots of shareholder value by buying
Capital
businesses.
misallocation,
Exactly,
effectively.
in the US, Bermuda, etc. So what they're doing now, if they have to buy an asset, you're looking at assets that are not really requiring massive amounts of capital. Now what they've done now is said, look, we're looking to invest about 5 billion rand into the continent, which is also quite a significant shift in their strategy.
That's a massive number, isn't it?
Well, it's a massive number, but I mean, relative to Old Mutual's market cap, it's still relatively small. And one must mention as well that, if you look at the profits that are coming from South Africa, that's more than enough to fund this expansion program. So, if you look at it on that basis, it's not really betting the ship, but it's still massive amounts of capital.
In terms of Old Mutual and the bank assurance model with Nedbank, of course, this has been a hot topic for debate for many, many years. And maybe now that Nedbank is doing well, they should just keep it in the stable. We haven't heard any rumblings of that asset being unbundled or sold off in the near term.
Yeah, I think most of the talk around selling Nedbank happened when they had capital issues, when people were looking for them to address the issues, improve the balance sheet, etc. Now that they've done that by selling other assets, for example, the Nordic business,
the pressure's off.
The pressure's off. There's not really a need to sell Nedbank, and Nedbank is generating good returns, good ROEs. So I wouldn't really be in favor of them selling Nedbank at this stage. I think Nedbank, if anything, can actually help them with their expansion on the rest of the continent. Because as you know, most of the banks on the continent are the ones who have the infrastructure. They have access to the clients. Whereas the insurers, they don't have that infrastructure. So you need a sort of a banking partner to be able to collect premiums and be able to sell products to customers on the continent. So I think Nedbank, funny enough, might actually help them in terms of growing on the continent.
Now this was quite a buzzword a few years ago, this bank assurance model, and from what I understood of it, banks were going to use essentially their distribution capability to sell a whole range of financial products linked to insurers. Is that still very much a strategy for the larger banks in the country at the moment, after we heard a lot about this in the early part of the last decade?
Yeah, it depends where you are. So in regions where the insurer lacks the infrastructure, it makes a lot of sense, because to spend on infrastructure, for example, branches, etc., will be very costly. So it makes a lot of sense in such regions like on the continent. But in South Africa, where most of the insurers already have their own brands and already have some of their agency forces operating, it makes not really much sense. So if you speak to some of the management teams, I mean, one of the contentious issues is profit share arrangements on products. I mean, well, how much does the bank keep and how much does the insurer keep? Which I think is something that investors have not really looked at if you're buying into an insurance company.
I think I wanted to ask one more. I wanted to give Ndina the short ball, Bronwyn, and ask him, Julian Roberts took a £6 million bonus. Was it justified?
Look, it was. I mean, 3-4 years ago, when Old Mutual was in trouble, everyone saying it was going bankrupt, he came to investors and said, these are my 3 targets or 4 targets. If I deliver them, are you happy for me to get X amount of money?
So it was all very transparent, upfront.
All transparent.
On
We stood up and said, it's fine. At that time, it looked like the targets
Impossible.
were quite impossible, yes, but he delivered on that, and he deserves what he's getting.
Well, there you go. You've got a very good, clear answer on that front. Let's talk about Sanlam and the strategy now that we're seeing, where Sanlam is looking to offshore assets, whereas Old Mutual, we've just spoken about pulling in. Do you think that Sanlam has got the timing right, whereas potentially Old Mutual didn't have the timing right?
I think it's more a matter of where rather than timing. So Sanlam is going sort of massively into Southeast Asia, India, Malaysia, Indonesia, whereas previously Old Mutual targeted developed markets simply because of the scale of the pool or the size of the investment pool, thinking that they could, even if they could grab a bit of market share there, they'll generate a lot of returns. So Sanlam are taking a sort of a different approach, not really targeting the highly competitive developed markets, but going into emerging markets where competition might be a bit less intensive and the returns might be a bit better.
The risk manager in me, Ndina, says that they're going into geographies that they aren't familiar with, language and culture. Are you a little bit worried about these plans?
Not really, because I think the key thing in terms of going to these regions is partnering with someone who knows the market very well. So if you look at the partner that they have in India, which is Shriram, it's a company that knows the low-end middle market very well, has been operating for a long time in India and that market. So what Sanlam are doing, which is very strategic and very good in my mind, is getting partners who know the local market very well and not really sort of taking them over, buying minority stakes to start off with, and then over time looking to increase the stakes in those businesses. So it's quite a good approach, I think.